Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Today's presentation is the only one that matters, kids, because everything else is fake. The stock market is fake, your retirement account is fake, your savings account is a charity donation to JP Morgan, and your government is a bloated Ponzi scheme with a flag. We are living through the dumbest era in human history. Pretty soon, we're gonna have people refinancing their 50-year debt slavery mortgages so they can buy iPads. And right now, you've got entire generations working 3 jobs just to afford their Lucky Charms. And in the middle of all this, the orange ticker STRC Stretch is quietly showing up and saying, hey, what if we just paid you to escape? This is a product for the end times, kids. Have you ever read the book of Revelation? This thing is paying 10.5% backed by pristine collateral in Bitcoin. You can margin it, you can loop it, you can actually earn money while the system burns down around you. It's like Michael Saylor took a look at the Federal Reserve and said, you know what, I think I can handle it from here. While the average American is drowning in credit card debt, you can literally open a brokerage account, buy Stretch, and collect yield, while Strategy uses your capital to buy Bitcoin to make your investment more safe. You're earning yield on the death of the dollar. This is not a hedge, kids. This is the revenge that you have been waiting for. So daddy isn't here to sell you some hopium today, kids. I'm here to tell you that this is the first product in modern finance that doesn't require you to kneel anymore. You don't have to beg a bank for 4%. You don't have to trust a politician to keep promises. You are buying a yield engine that points directly at the only incorruptible ledger left on Earth. So yes, you can call this absolutely revolutionary. You can call it insane, whatever. Call it whatever helps you sleep at night. But when you're sitting there watching your 401k totally implode, just remember that there were people who understood what Stretch was. One of them's name is the Bitcoin Lizard. There are people who chose to fight back against the fiat system that treats them like obedient cattle, and I am one of them. So don't miss the forest for the trees, people. This is the moment in your life where you are either grazing in the inflation pen or you step into the fight. Because the real war is not the left versus the right anymore, unless you're totally asleep. It's honest capital versus counterfeit capital. It is those who earn against the system versus those who feed the system. So welcome to Stretch, the world's first meta carry trade. This is not just an investment, it's a declaration of financial independence, and I am going to help make you rich. Now that said, this is not financial advice at all. Consult your stupid, idiot, moronic financial advisor for that. I am here to give you financial jihad. So if you can't handle your own emotions with your own investing decisions and you have to project your stupidity onto me, why don't you go consult that guy who can give you a 4% after fees? You guys are gonna love this video. This is a carry trade using Stretch that can help pump your bags in the face of the coming economic collapse. But before I get into it, I really want to thank Horizon for sponsoring this video. If you guys didn't know, Horizon helps you tap the home equity that is trapped in your rotting drywall, and they let you buy Bitcoin with it. That's correct. They let you buy Bitcoin with your home equity. How incredible is that? And there's no debt, there's no monthly payments or term limits. The Bitcoin is fully yours to hold however you want to. So the link is in the description below. Check them out. I'll talk more about them at the end of the video. All right, so here's where you actually need to pay attention, because Stretch is not some scammy crypto penny stock nonsense. It's not a meme out there. It is a preferred share that is issued by Strategy, the same company that's been stacking more Bitcoin than every other country on Earth. This is a financial instrument with real structure and actual math behind it. So here's how it works. You buy Stretch, you're lending money to Strategy. What they do with it, they go straight to the market and buy more Bitcoin. There's no middlemen, there's no magic tricks, no hoping some NFT collection goes to the moon. Your capital is used to build a war chest of the hardest asset in human history, and you get paid for it. So just check the terms. The par value, $100. It doesn't moon, it doesn't nuke either. It just sits there and so far has been acting like a stable coin, but with a pulse. The dividend yield is 10.5% annualized, and guess what? They pay you monthly. This says quarterly right here, but that is for the other Strategy preferred. Stretch specifically is paid monthly. Do not forget that. There's no staking rewards here. There's no crypto airdrops and tokens that unlock every 6 years. This is just like cash. Now you're asking, Adam, why are you making this clear? Because there are so many stupid idiots on Twitter lately saying, what if this implodes like Celsius BlockFi? It's something else entirely. It's in the legacy financial system rails and it's backed by Bitcoin. It's nothing like what you talk about, so shut up. So send this to your friends and family because this is still too good to be true, but it is. You get paid 10.5%, so there's no reason to have a checking account or a savings account anymore. You get paid 10.5% and that company goes out and buys Bitcoin for the both of you. That is the offer. That is the pitch. That is how you finally get paid for not being a sucker in 2025. And before we get into the math of how you can make incredible money with this product way beyond that 10.5% yield, we got to get something straight, kids. Remember, most yield products that are out there, they're total jokes. 3%, 5% if you're lucky. And remember, the collateral that they're based on is absolute garbage. Some bloated government bond or junk corporate debt that will blow up the minute anyone actually needs the money. And Strc flips that on its head. First, the high yield is 10.5%. We all know that nothing else can pay you that unless it's another strategy preferred like Stride giving you 13.3%. This is not a typo. This is not some intro rate that they're gonna yank away after 6 months. This is more than double what Wall Street offers the public, and it's just sitting there because the system is too broken to compete with it. And we have the strong collateral. There's no dollar debt. It's not some company's IOUs stapled together with wishful thinking. This is backed by Bitcoin, the real thing, the only assets that management cannot dilute, default on, or print out of thin air. Think about buying a corporate bond from some other entity. Imagine if you're buying a corporate bond from, let's say, Hertz, the car rental company. How would they liquidate $1 billion worth of beat up cars? Exactly. A hailstorm coming is going to wipe away the value of their fleet. Bitcoin doesn't have physical risk, and Strategy has the biggest corporate balance sheet of the greatest collateral in history. So anybody who thinks this investment isn't safe, you need to get your head examined. And this is the beauty. It has price stability. It's not swinging around like a penny stock or MSTR or some meme coin. It is designed to trade at par of $100. Boring and stable, just like the cash that you want to pay you for the rest of your life. And this is why it's different. This is why the old rules no longer apply. This is why we are first to the punch. For the first time, regular people can actually own an instrument that pays real yield, that beats inflation, that holds real collateral and doesn't blow up every 6 months. Strc isn't just a better product because it's built on top of Bitcoin. It is a completely new game. And if you understand that, you will realize how rigged everything else actually is. And if you sent this to your stupid financial advisor, well, guess what, stupid financial advisor? This part's for you. Look at it trading right at the $100 mark. This is absolutely beautiful. We are at 5 days, $100. The lowest that the price has dropped was just for what? 1 hour on Friday? Oh no, it dropped 40 cents and immediately rebounded in less than a day. Boo-hoo. Why would you hold your money in a checking account that gives you nothing when you can make S&P returns paid monthly using Strc? Give Saylor your money, he'll give you the 10.5%, and then he'll go buy Bitcoin, making your asset more safe. So this is where every single finance boomer or Wall Street quant will start to sweat a little bit. Because if Strc pays you real cash and hugs $100, well, that opens a lot of opportunity and optionality. Now remember, this is not financial advice in the slightest, but the brokers, they're gonna get so bored that they're gonna let you borrow against it. That's right, you can literally use this yield machine as collateral, just like the banks do with your deposits while they lecture you about prudence. And this is gonna be the part that nobody has really told retail yet. You can run 2 different plays and both make you feel like you're cheating at Monopoly while everyone else is still stuck on Go. And option A is going to be the carry stack. You borrow at 4%, you earn 10.5%, you pocket the spread. That's it. You are now running a carry trade like a Wall Street vampire, except you don't have to wear a suit or fake a LinkedIn profile. For the first time in your life, the math isn't rigged against you anymore. The millennials are finally getting a win, and it's betting against America's ability to do math, and it is a glorious thing. And option B is the meta carry. You can use margin and you can buy Bitcoin. So you'll get paid your yield on stretch, and then you ride the upside of Bitcoin's insanity. Now, if Bitcoin moons, obviously you're a genius. If it dumps, well, congratulations, you're still beating every savings account in America. So either way, you've finally broken out of the hamster wheel. And this is how finance was always supposed to work, not 10 people in some boardroom slicing up fees, not some unmedicated goat farmer named Jim Cramer on CNBC telling you to diversify into sadness. Just you, the yield, and the button to double down. So you want to know how the game was rigged? This is it. You get margin, you get yield, you get exposure to Bitcoin, and for once the system can be on your side. Welcome to the wild loop. Do not blow it. Now, before everybody's up in arms, Adam, how do you get that cheap financing? And the reality is, I don't know exactly. I'm not a leveraged trader. This is not my wheelhouse in the slightest, which is why this is not financial advice. I'm just saying I literally just went on the Robinhood website and it said, sign up for margin. And I'm not paid by Robinhood at all to say this. I'm not partnered with them in the slightest. I just heard that they have really cheap margin. I went to their website and this is what it's telling me. Looking right here, less than 50K, you can get a 5.25% interest rate. And what did I do to get this approval? I literally typed in my address and then I put in how many years of investing experience I have. So getting approved for a rate that is greatly lower than the stretch yield was remarkably easy. But like I said, I don't recommend this to everybody. You need to have conviction in Bitcoin, obviously. And number two, you need to have conviction that people are going to want a 10.5% yield, so stretch will stay trading at par. Now, so far, the thesis has proven to be correct. I'm of the opinion that the best product always wins in the free marketplace. I know, shocker, all of the skepticism out there about these strategy preferreds, about preferreds in general. I think they're totally unfounded. Why wouldn't you believe in something that will give you double to triple the yield what a US government bond does? So you need to have those two prerequisites, obviously. If you don't believe in Bitcoin and you don't believe in strategy, well, then you probably shouldn't be buying this. So let's talk about option A, which is the carry stack example. Just for math purposes, we're going to say that we're going to use a conservative 50% margin strategy. Now, why is that conservative? Because it's only 50% margin on something that is designed to stay at the price that it's trading at. That's correct. If there's zero volatility and it trades at $100 forever, in my mind, I'm thinking, why wouldn't I want incredible amounts of leverage on that? Really, this is just dependent on your own personal risk tolerance. But in my opinion, if the thesis holds, the math tells you it's incredibly profitable. So I don't know what rate you're going to get with margin from Fidelity or Charles Schwab. Do not come crying to me about how this is unrealistic. I'm literally just giving you a mathematical example. And I just showed that Robinhood can give you rates that are a lot under what Stretch pays you. So stop crying. So the initial investment happens. And then step two would be the margin borrowing. Let's say that you borrow 50 grand on margin at a 4% interest rate. Remember, this is just a mathematical example. Calm down. So the broker charges you 4% interest, which remember is basically what Chase Bank and Wells Fargo charge you to exist. But now you actually get something for it. So now you're sitting on 150 grand in Stretch that's paying 10.5%, which is not theoretical. That's not projected yield or forward guidance. This is money. We're talking over 15 grand dropping into your account over the next year. And the broker gets 2 grand for letting you borrow their magic pretend money. So what's left? That would be $13,750 of pure profit. That is a 13.75% return for pressing a couple buttons and having the basic will to not spend it all on Applebee's. And here's the best part. As long as Stretch stays at $100, your collateral, it never moves. You never get margin called, and you keep cashing checks while everyone else prays for another stimmy. And this is how you get paid for not being a victim. This is the carry stack. It's so simple. You could literally explain this to your parents and watch them wonder why their conservative mutual fund hasn't paid them anything since 2008. All right, so now Now let's take the gloves off and crank the risk dial a little bit just to keep things interesting, but not so far that you're gonna end up eating canned beans behind a Dollar Tree, fighting the raccoons for protein in your retirement. This is what I am calling the meta carry, because we start with the same $100,000 in stretch, the same 50% margin, but this time you take the borrowed 50K and you buy Bitcoin instead of more stretch. Why? Because you actually want a shot at not dying in poverty, and you're sick of watching the S&P 500 go sideways when you compare it to inflation while your rent triples in this economic dystopia. So I'm gonna break this down like I'm talking to your idiot cousin who still thinks that Dogecoin is gonna change his life. Stretch pays you $10,500 a year. That's actual money. You borrow 50K at 4%, so 2K in interest, same as before. But now Bitcoin does what it always does. It pops another 30%. That's another 15 grand in your pocket. Not in some fake accounting way, but in some real way that you can use to buy real groceries or ammo, or if things go really south, a Honda Civic to sleep in. So if you add it all up, you get the 10.5 grand from your stretch yield, you get the 15 grand from Bitcoin minus the $2,000 interest. That is $23,500 on your 100K in a year, a 23.5% return, while the average person calling up a payday lender because they can't afford eggs. So let's be real. If Bitcoin tanks, yeah, sure, you can lose. If the world truly melts down, you might be bartering stretch certificates for a stale pack of American spirits in a strip mall parking lot. But guess what? If you don't take any risk, you get to be the guy that's eating the raccoon stew behind Dollar Tree anyway. Except you did it safely and you never even tried to get out. And that's the difference right now, people. I'm sick of people telling me, Adam, but not everybody's gonna do this. That's correct. But you're not everybody because you're smarter than them. Most people, remember, are set up to lose by default, and they're still one missed paycheck away from learning how to set a squirrel trap to eat breakfast tomorrow. This strategy actually gives you a shot mathematically to stack real yield and let Bitcoin upside go up in the background while everyone else is circling the drain arguing about avocado toast. This is not fantasy math. I'm not an influencer that's telling you to buy the dip. I'm not a crypto trader degenerate. I am the speaking voice for the working man, spreading the orange gospel on the front lines every single day for you. This is yield plus Bitcoin appreciation minus the real world costs. And if you can run a calculator and have the basic will to survive in this total wasteland, you are already miles ahead of most of America. So yeah, take your chances if you want to, because if you win, you are living in the future that Michael Saylor is bringing forth. And if you lose, well, at least you got a chance to see how the real game is played before you join the rest of the country eating luxury dinners at Chili's. Now let's talk about why this thing actually works and why for once you're not being led off a cliff by some guy on Fox Business who's never made a profitable trade in his life. The first is price stability. Remember, it's sticking between $99 and $101. Absolute worst case scenario, let's say it stays between 95 and 105. But remember, the dividend is variable rate, so Saylor will raise it to 13% if that means he needs to keep it above $99. Ever since it has hit par, it has not dropped down because the demand is there and people are waking up to the yield glory. So if it stays in that band and you're responsible with your leverage, well, it's never going to get margin called. So what if somebody makes a stable coin that's backed by Stretch and you can access DeFi levels of leverage? I don't know, but maybe there's an opportunity there, just saying. Next is the broker treatment, because this isn't some speculative dumpster fire that triggers alarms at the compliance desk, okay? Brokers, they look at Stretch and they see a bond because it's stable, it pays out, and it makes their margin department look smart. So they let you borrow against it at a decent rate, and it looks like you're actually part of the club for once in your life. And finally, it's a synthetic money market. Stretch is the closest thing that you'll ever see to a Bitcoin money market fund. Stretch itself is kind of like the Bitcoin-backed money that Hal Finney warned about years ago, because the principle's not gonna yo-yo, it's marginable collateral, and that's what banks wish that they could offer. And Hal was talking about banks offering money that's backed by Bitcoin. What do you think this is? So just a heads up to the haters, remember 6 months ago when I first came onto the scene and I was talking about how strategy was was going to be a Bitcoin bank. And all of these total low IQ idiots out there were saying, well, actually, Adam, the technical definition of a bank, you're missing the point, moron. I was talking about how there's a new type of bank, okay? We're having products that are built on Bitcoin. I don't want to play your stupid semantic game. I'm not going to invent a new word for bank when a bank is going to be replaced. Get it through your head that this is not normal and this has never existed, and you are literally watching the wall between the traditional credit markets and Bitcoin collateral dissolve in real time. If you don't see how revolutionary this is, you might as well be living under a bridge, trading soup cans for Ethereum. I need you to bookmark this right now and come visit me in 5 years, okay? You know what? I'm kind of changing my opinion a little bit. I want this to be the video that I want you to forward to people to explain Stretch. Because this is where your average finance bro's brain is gonna totally explode. This is not just yield. This isn't just Bitcoin. This is a recursive feedback loop. This is the death of the fiat system in slow motion. Or fast motion, really, because this is a perpetual motion machine for stacking capital while the fiat world chews off its own leg. So I'm gonna spell it out for anybody who's new to this so you don't miss the moments that history changed. First, strategy issue Stretch. They take your money and they buy Bitcoin. Simple, transparent, no smoke, no mirrors, no politicians in the back room. This isn't some David Copperfield magic trick, okay? So all of you Ivy League MBAs who have had your brains rotted from communist indoctrination, maybe you should start to understand that your education was a total waste. Second, investors, meaning you, the one who didn't blow your last paycheck on a collection of Funko Pops, you use margin on Stretch to buy even more Stretch or even more Bitcoin. Suddenly, you're playing the same game as the guys who crashed the global economy and got a bailout for their trouble. And third, that extra demand means even more Stretch gets issued, and guess what? Even more Bitcoin gets bought. The flywheel starts to spin faster. Fourth, the Bitcoin price rips higher because the demand is finally coming from a recursive yield engine, not some degenerate leverage shop in the Bahamas. This makes Stretch safer. It's more over collateralized. That means the brokers, they get more comfortable. The margin gets easier. The institutions flood Stretch, and then the loop just tightens. This is not an ordinary feedback loop, kids. This is a recursive nuclear chain reaction that takes the fiat yield, it weaponizes it with Bitcoin, and it builds a structure where every single part makes the cohesive other parts stronger. Yield begets Bitcoin. Bitcoin makes the yield safer. The yield then increases, and then the process repeats until your old economics professor cries in his shower in a fetal position. If you don't see how insane and world-changing this product is, I honestly don't know what to tell you. You are living through the death of the old system and the birth of the new one. You need to get on the flywheel or you get left eating the raccoon spleen with the other retirees behind the Dollar Tree. All right, let's talk real numbers really quick again, because I know that half of you won't listen to a word I say until you see a chart with some big orange bars. So look at these returns. Even if you don't touch Bitcoin, just running the carry only strategy at 50% margin, you're looking at 13 to 16% per year. That's not some crypto APY that vanishes when the website goes down, okay? This is just the math on a product that actually exists, that is working very well. Now, if you want to crank it, you obviously go the meta carry route. You toss Bitcoin into the blender and you're pulling 23% if the Bitcoin does 30%, and over 50% if we get one of those classic Bitcoin melt-ups. And remember, this is not hypothetical. This has only happened before a million times, and it'll probably happen again. And this is going to happen while the rest of the country is figuring out which flavor of ramen pairs best with existential despair. But remember, I do like to keep it honest. What can go wrong? Let's say Stretch drops below $85 and $90. Yeah, you get margin called. That's the universe testing your conviction in Bitcoin and strategy. And this one isn't so relevant to right now, but there's always the risk of the rate. If the Fed decides to make everyone's life even harder and the margin rates spike, well, your spread is going to shrink, and suddenly that carry doesn't feel so cozy anymore. And then you have the Bitcoin risk. Let's say Bitcoin nukes 60%, you're going to feel it a little bit, depending on how leveraged you are, of course. Go to ChatGPT, go to Grok, type in your numbers, run simulations, do it on a napkin with a pen if you want to, if you don't trust AI. Depending on how leveraged you are, you could take a beating and you might be swapping Stretch Stretch for some canned soup. But this is the real deal, and this is the central thesis. If Stretch stays at par, the downside is obviously totally limited, and the upside is just ridiculous. You're earning elite returns on something that used to be reserved for Wall Street vampires, except this time you're the one at the feast. This is not some yield play, okay? This is the new financial structure that you need to get used to. You remember, the banks built their empire doing this with treasuries for 100 years. Now Bitcoiners are getting the keys to the kingdom. The only real risk, you missed the chance because you were too busy watching reruns of the Beverly Hillbillies and eating stale Triscuits. My name is Adam Livingston. I am the Bitcoin Wizard. Please hit the like button on this video, subscribe to the channel, send this to your family and friends so you can save them from the monetary death spiral of inflation. I am on the front lines bringing the energy every single day, unlike anybody in this space, and I need you on my side right now. We need eyeballs on this monetary transformation, so I need your help spreading the message. Leave a comment to help the algorithm as well. Let me know what content you want to see next. Have a terrific day. Do not party too hard. Class dismissed. Once again, a special thanks to Horizon for sponsoring this video. Most people don't realize this, but on average, 60% of American homeowners' net worth is locked up in their primary residence. And with home prices more inflated than ever, Americans now sit on a combined $35 trillion in home equity. Now there's a way to unlock that trapped capital and put it to work in Bitcoin. Horizon helps homeowners unlock a portion of their home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual, and then later when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you've been sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.